Good morning. This is February 27th, 2023, and it's about 9:45 a.m. Pacific Standard Time. So the market looks like just from Friday, it looks like it's actually starting to create this balance area right in here. And as you know, I am I guess what you call a pattern trader, meaning I look for patterns in the market, so I look for consistencies, even inconsistencies, and then I trade by that. I also look at trend, long-term trend and short-term trend. So as you notice, I don't have any moving averages here. I don't have any indicators to tell me anything, because at best those are maybe 50% accurate, even if that, but they actually take away from what's really going on in the markets. You know, these markets are controlled. There's no doubt about that. If they were not controlled, then a lot of those indicators would be pretty accurate. But they are controlled. But they're controlled by people, and people have they have patterns, they have conditions, they have habits, and even the ones that are controlling it, they have their habits and conditions. So you'll see that here. At least I learned how to see that in these charts, and then I can pretty much, I guess you can say, guess where this market's going to go. Don't like to use the word guess, but what would be another word for that? I guess you can say it's a calculated guess or an estimate. You know, where it's going to go based on. Not probability so much, but more of just information that I've gathered just looking at the charts. Like I said, looking at certain patterns in here. So anyway, it's starting to build this other balance area. It's kind of like a step down. I still believe this market's going to continue down to here and even beyond, and that's might take some time to do that, but I'm guessing in the month of March you'll probably wind up down here. So things change, you know, as they start to progress. What I mean by that, it's already starting to form a balance area, and like I said before, once it forms these balance areas and it breaks out, then the market usually takes off in that direction. So this was a balance area, and it took off and it came here. So I see this as a balance area and almost see it as a step, like a step down. And a consistency, as far as the timeline's correct, the space between here and here is a certain amount of time, and here, and the time between here and here. So it's pretty consistent with that. So those are the things that I look at. So what's the possible scenario here? I had drawn these lines here the last week, and I thought these would be a pretty good resistance zone, and the market would hit here and then finally bounce, you know, like it hits and bounces up again, or coming down. Let's say it's here and it bounces up and comes down. Same thing here, it would come down to this point and bounce up. It's still a possibility it might do that, although it's building this balance area in here. So it might even come down further, even maybe to here, before it does that bounce. But like I said, I don't know yet until it actually starts breaking out of this box area, or see how long this time frame right here is drawn out. So we'll see. I mean, I would suspect at least this week this market ought to break either out of this box, up or down. Now, if it breaks out this way, then we're back into this zone probably, and then it's just going to prolong this market going down. Of course, the other scenarios could keep going up, and then we're back into a mini bull market, which I don't see that happening, but you know, anything's possible. But I don't have that feeling. I have a feeling from this point it's going to break down and continue, because I do have put options. So the good thing about the put options, I bought far enough out, I have April's, to where this market, even though it starts to gyrate in here, it's taking up some time, and the put options lose value as it gets closer to its expiration. But I'm still far enough away till I'm okay. The other thing is, if you buy put options that are way out of the money, and I'll have to explain that in an option video what that means, but I buy options that are either super close to the money or at the money or in the money. And that way, when it does lose value because it's losing time, it doesn't lose that much, hardly anything at all, because you're really close to in the money. So in the money, I'll just tell you real quickly, is where you buy the option at the price of where the market's sitting at. And out of the money is you buy the price of the option where the market was before, let's say going down, it was like up here. So it's going to be cheaper. I'm sorry, it would be down here. So the market would have to get down to this point before that option started to make money. When you buy in the money, that means you're buying where the market was. And that means as this market goes down, it's gaining more and more value because it's already gained its value in here, and now it's gaining more, as opposed to waiting for it to come all the way down here to start gaining some big value. So anyway, in the money, at the money is pretty much where the market is trading at right now, and that's where I like to buy my options. They're more expensive than if you're buying out of the money, which is down here, because like I said, it gains value immediately. So if this market starts to come down and I'm at the money, it's starting to build up some value really fast. Conversely, if the market goes the opposite way, it starts to lose money really fast. So you really have to know how to call these markets and make sure that these markets move in your direction pretty fast. And like I said, if you buy a couple months out, then you're pretty safe, even if it moves against. But again, if it moves against your which direction you want it to go, and you start losing money, you have to start figuring out how much you're going to lose before you have to get out, because you don't want to take a big loss in this. I would say anywhere from 10 to 20% of what you originally put in. I wouldn't lose any more than that. Get out. You can always get back in. So anyway, I'll make a video on that and be more clear about how I do that, how I trade options. Okay, so for now, this market is sitting in this area. Let's see, I haven't taken a look at what the Dow is doing here. So the Dow's back into this big balance area that started back in last year, November it looks like, and it's still in this area. And once it starts breaking down beyond this, it's going to do pretty much of a free fall, which, that would be really sweet. And I'm sure that's going to happen sometime soon. And then the NASDAQ, same thing as the ES, it's starting to build this little balance area here, and it needs to break down below this line for me to gain some value on my options. I've been looking at gold, and gold's been going down. A lot of big institutions and countries that are piling up, and banks are piling up on gold right now, and it's still going down. So my guess is that this thing is going to just take off big this year. It could happen this month, start taking off and break this line, and it's just going to go way up because it does trade pretty much opposite the market. Let's see, the VIX is kind of an indicator that I use. I explained how I use this before, but it's down here. As the market starts to go down, this starts to go up. And right now it's at a very low. As you can see, here's a longer term chart, and the market's way down here and way back in, let's see, I'll go back even further. So you can see there, it's way down here back in 2018. They came up during the pandemic. The stock market went down and this went up. And so we're going to see this happen again here. As the stock market starts to come down some more, it's going to start going up, and it's in this balance area, and eventually it's going to break out and start going up. And like I mentioned before, when we hit bottom of the stock market, it's going to be somewhere, the VIX will be somewhere up in this area. But you can see it now, so we're far from the bottom. Far from the bottom. So here's the Dow Jones again. This is back during the pandemic. Market took off, and now we're in a bear market. We're actually in this balance area. And like I said, once it breaks down here, it's going to do a pretty good free fall coming down. And there's the ES. Same thing with this. And the NASDAQ. Same thing with the NASDAQ. Looks like it's got a steeper decline right here. And eventually it's going to break down into this area. And then we got the Russell. Same thing. We're still in a bear market. Everything going down. So I'm not looking at any indicators. I'm not looking at moving averages. I'm not looking at the news, because everything is right here. This tells me everything. So I don't need to look at that, and I can save a lot of time. I don't need to do any market analysis on whether the companies are strong or not. Charts tell me everything right here. A lot of companies are in trouble. A lot of companies like Apple and Amazon and Google, they're all laying people off. So obviously this market's going down. And like I mentioned before, because some people had said that Tesla right now is at a good buy, so they're buying Tesla. And they don't think it can go any lower. But I saw Amazon back in 1999, 2000 go down 2,000%. Went all the way down to like 27 cents. It was only up at $5, but it went down 2,000%. So all these markets can go down, not the indexes, but the stocks can go down that far. So that means Tesla can wind up in the teens. It can be $18, $19 before it hits bottom. And I think that's what's going to actually happen. Because we're in a more of an extreme environment than we were back in 2000 and 2008. Okay, so here's Apple. Apple's in a bear market also, but it looks like it's making the same kind of patterns as the indexes. So I'm pretty much following the indexes. Amazon, same way. It's pretty much in a bear market. And it's going down pretty big. So it's down to $94, and I see it going way down. Same thing with Amazon. This can wind up in the teens also when everything's said and done. So we'll take a look at Meta, which is Facebook. See, where is it? There it is right there. Same thing with that. It's gone down. Now it's up here, and people say it's at 170, and they think it's a good buy. Well, what if this thing continues down and Facebook also winds up in the teens also? It's not such a good buy after all. They're comparing it with this. And yeah, if you're going to compare it with that, it is a great buy. But what if this market continues down? Then it's a lousy buy. It's not a good buy at all. Same thing with Tesla. Tesla's was up here, let's say $400, and now it's down to 200. So yeah, that's looks like a good buy. But what if we're not at the bottom yet? What if bottom is down here, which I believe that's where it's going to go? then it's not such a good buy after all, right? So I think that's what people are doing. They're seeing that this is a good buy. So the interesting thing about this, as the market starts to come down and it gets down here, I remember people saying Tesla was a good buy. Then it went back up here and people were happy because they thought it's a good buy. Then it came down here and now they're saying, or they were saying back then, this is a good buy. Then the market came up here, they're happy. Then the market came all the way down here, and now they're saying, oh, this is a great buy. And now it's up here. And they're still saying that this is a good buy because they're comparing it with these. But what happens if the market comes down here? So I would not trade these markets unless I thought that the overall market was pretty strong and it already hit bottom. And we're far from that. I mean, this economy is really weak. It hasn't been this weak ever in all of history. So I would not count on this being the bottom. I would say the bottom's probably down in this area, and then it would be a good buy. So how do you know when we hit bottom? If you stay with me on this channel, I can let you know pretty much when we hit bottom. But compared to 2008 and 2000, what I'm seeing here, we're not even close to bottom. The environment that we're in, we still have a long ways to go. So as a long-term trader, I would not buy here. I would wait till it hits bottom, and then we're going to start going back up for another, 10 years, and that's the time to go in long-term. But you have to remember, after 10 years, we're going to hit, or 15, we're going to hit another correction, and then you want to sell. But people never sell. They just hang on to their positions. You have to sell. That's how you're going to make money. That's what this game's about. You're buying, you're selling, you're buying, you're selling. Okay, back to the ES, and this is where we're at right now. So the market's, I don't know what it's going to do today. It's probably not going to do a whole lot. I mean, it could just drop down into this area today. It's possible. I wouldn't count on it, but I wouldn't discount it either. So not sure when it's going to do that, but we'll keep track and see where it's going. And possibly when it starts getting down below this, it might retrace and come back down, and that might be the time I can buy more put options and write it down to here. So that's a strategy now, but like I said, that can change according to how these patterns are developing. And so that's it for today. Talk tomorrow. Okay.